Today, President Biden finally unveiled that executive order on crypto everyone was waiting for. We talked to Bitwise's Matt Hougan on what it means for crypto investors and how the order puts new pressure on the Fed to explore a digital dollar. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto prices soared overnight after President Biden announced his long-awaited executive order on cryptocurrencies. Don't worry, a lot more on that in a moment, but let's check out some prices first. As of noon Eastern, crypto prices surged an average of 7.5%. Bitcoin gained 9.5% since yesterday, was back above $42,000. Ether, meanwhile, rose more than 7%, and XRP gained around 6.5% since yesterday. Okay, let's jump into the news everyone's talking about. That executive order. President Biden's directive calls for agencies like the Treasury Department and the Federal Reserve to ramp up research into regulating crypto in the U.S. Biden specifically calls for protecting consumers, cracking down on money laundering or other crimes, ensuring financial stability, and promoting responsible innovation while maintaining the U.S.'s competitive edge.
The executive order the president will release today is in exactly that direction, which is we need a comprehensive all-of-government framework to address the emerging risks and opportunities that digital assets pose. And the financial innovation underlying and the technological innovation underlying this boom has a lot of potential benefit, but the risks and the costs are increasingly becoming apparent, and we need a 21st century government structure to actually address this.
The reason the crypto market is responding so positively to the news today is because, well, it's what everyone in the industry has been waiting for, much needed clarity on how the federal government plans to regulate crypto. The order is also more friendly towards the industry than many expected.
I think there are two big takeaways. The first is that a lot of the language in the fact sheet and then also in the executive order of itself is incredibly positive for the crypto industry and the broader crypto ecosystem. What we have here is the President of the United States saying that it is important that the U.S. maintain its leadership in digital assets. Secondly, I think it's really important that this executive order doesn't lay out a bunch of policy directives, but instead is asking very thoughtful questions that relate to various public policy goals. This is how we want policymaking to happen. We want policymaking to start with a thoughtful study and a thoughtful analysis. We want ideas to be proposed. We want them to be publicly and openly debated.
Part of that executive order today also called for the Federal Reserve to double down on its research into a central bank digital currency. The Fed released a report earlier this year on the creation of a so-called CBDC, but it didn't take a position on the issue. Now Biden's order calls for a new, quote, urgency in exploring a digital dollar. The creation of a CBDC would put the U.S. on a more level playing field with China, which has been developing its own digital currency and amassing millions of users. Still, policymakers are evaluating whether a digital dollar would harm financial stability. Finally, in Europe, officials in the EU made it clear that crypto is included in the sanctions against Russia and Belarus. The EU said that crypto fell into the category of transferable securities, which means sanctioned businesses and individuals are banned from using them, just like traditional currencies. Some have expressed concerns that crypto could be used to skirt sanctions in both countries, but experts have said that low trading volume makes that impractical. Okay, turning back to regulation here in the U.S., fellow host Mackenzie Sigalo spoke with Bitwise CIO Matt Hougan to get his take on the new order and whether the crypto market is poised for a new bull run. Here's what he said.
I am joined here on Crypto World with Matt Hougan, the Chief Investment Officer for Bitwise Asset Management. Thanks so much for joining me today. Let's start off with the big news. We've got Biden announcing an executive order on crypto regulation. Lots of digital currencies rallied after that announcement. What's the temperature in the room on this? Are these forthcoming rules bringing welcome clarity, or could new guardrails actually be a bad thing for an industry that is still very much in its early days?
Oh, thanks for having me on, and that's a great question. The executive order is the signal that we're entering a new bull market phase in the crypto market. I think it's that important. The big question coming into the executive order was whether it was going to be balanced, whether it was going to talk about both the risks and the opportunities of crypto. Based on our initial read of what's in there, it does exactly that. The crypto market needs better and clearer regulation if it's going to go truly mainstream, if it's going to go from a $1.5 trillion industry to a $15 trillion industry. What we got here was sort of a shotgun start, telling all regulators to push that forward, do so in a way that protects investors, but that doesn't, throw the baby out with the bathwater, that keeps the economic development here in the U.S. I think it's pretty close to the outcome we were all hoping for, and that's why you're seeing markets rally today. And I suspect that rally will continue, for the rest of the year. I think it's a really important moment.
So the Biden administration wants to explore a digital version of the dollar, which comes as China leads the charge on its own central bank digital currency. And I'm wondering whether you have any thoughts on the U.S. potentially getting into CBDCs.
Yeah, well, I think it's inevitable, right? The way money will move in the future is on blockchain. So it is inevitable that not just the US, not just China, but every major government is going to introduce a CBDC. Now, I think there are pros and cons to CBDC, right? There's significant privacy concerns, but there's also significant efficiencies and potential financial inclusion elements. So pros and cons. As a crypto investor, though, it's simply a net good, right? Because it acts to bring more of the crypto environment inside a regulatory framework. And it also will teach individuals about using crypto assets in their day-to-day life. So I'm mixed on whether CBDCs are a great thing for society, but for crypto, I think they're a major milestone, and I do think they're inevitable.
Sam Bankman-Fried and Michael Saylor have both said on Crypto World that the lack of regulatory clarity is what was keeping crypto prices under pressure in recent weeks. Does this executive order provide the regulatory clarity that investors had been worried about? And do you think that this order from President Biden will help facilitate a longer rally?
No, it's exactly right. Bitwise, we serve financial advisors, and we talk to thousands of them over the course of the year. And when we did a survey of them in December of last year, we asked what's preventing them from allocating. And it wasn't volatility. It wasn't concerns about valuation. It wasn't not understanding what crypto and blockchain was. The number one thing they said was the lack of regulatory clarity. Now, we haven't gone from 0 to 100 on regulatory clarity with this executive order. What we have done is go from 0 to 1. We've taken the first step to establish a true regulatory regime for crypto. And look, if you believe in the underlying technology, if you believe it's as disruptive as all crypto investors do, you want to see the regulatory safeguards exist that allow that technology to express itself, that allow it to affect not just a little part of society, but all of what we do every day, of how finance works, of how the web works. So I do think this is a signal moment, and I do think it sets the stage for a bull market that could last at least through this year and potentially beyond. I think it's a really important development.
Generally speaking, Bitcoin has been faring better than the market since the conflict in Ukraine began. Meanwhile, tech stocks are getting crushed. So I wonder what's happening here.
Yeah, well, one thing we've learned from the conflict in Ukraine is the value of decentralized services, right? Crypto kept working even as the financial services in Ukraine faced challenges. So the world is realizing that the traditional monetary order is changing, that decentralized services are valuable. It's not surprising to me that Bitcoin and other crypto assets are rallying on this fact. You also, with Bitcoin specifically, the conflict in Ukraine has made the inflation fighting effort by the Fed much more challenging. And of course, Bitcoin, one expression of Bitcoin is as a hedge against inflation. So both of those have aligned to support Bitcoin. And I think, put a major catalyst behind people realizing the value of decentralized services.
Another market dynamic that I wanted to ask you about is, since November, Bitcoin and other cryptocurrencies have very much been moving in lockstep with equities and bucking the meltdown that we've seen in commodities. And I wonder, why do you think cryptos are more closely tied to market performance at this stage rather than global commodities?
Yeah, I think it's a temporary impact. I think what we've seen since November is that risk on, risk off has dominated market dynamics, right? The Fed moving from easing to tightening. Individual corporate performance didn't matter. It affected stocks, almost across the board. And within crypto, it didn't matter as well. It overwhelmed the secular trends that are powering crypto's development. I think it is a temporary phenomenon, though. Eventually, those risk on, risk off factors net out, and we start to see the true drivers of crypto begin to come to the fore. So that's an example of what's happening today with the executive order. It's changed the nature of the game. That's specific to crypto, and you're seeing crypto move, although in the same direction as stocks, because the market in general is risk on, at a much larger beta, right? Much bigger moves. I suspect the correlation between crypto and equities over the rest of the year is going to come way down. These two asset classes aren't fundamentally correlated. The underlying drivers of them are fundamentally different. But during these periods when the market is just focused on, risk off, you can see these short spikes in correlation. I do think it's temporary. I think we're almost past it, and we're likely to see lower correlations in the future.
Before we go, Sequoia Capital's Sean McGuire spoke to TechCheck and said the executive order shows a pivot in DC. Take a listen.
The rate of learning in DC over the last 12 months has been pretty staggering, to be very blunt. I've been really impressed to see kind of a large portion of the House and Senate get up to speed really quickly. And so it's hard to say what time frame, the follow-ups to this EO will be, but I think the US has a strong opportunity to be a leader in global crypto.
That's all for today. Crypto World will be back again tomorrow with a lot more. We'll see you then.